Welcome back to the course. In this module, we're going to be discussing about learning about the distribution structure. Okay, so let's get started. This is the institutional selling. This is where the institutions are selling. Okay, so uh, this is where institutions exit their positions and downtrend begins. Okay, so what is distribution? You might be asking. All right. The distribution is a trading range that forms after an uptrend is complete. Okay. Price stops going up and then it goes sideways, and then institutions are quietly selling in that one. Okay. So if you see, like, I actually have a chart of, sorry, actually a chart of distribution here. You can see buying, climax, automatic rally. So what is telling is, like, this happens in uptrend, price stops going up, then it goes sideways, and then institutions are quietly selling. So when um, let's continue. So the key characteristics of an distribution happening is it happens after an uptrend, and price stops going down. Sorry, it stops going up. Okay, so guys, whatever I taught you for accumulation structure, identifying the characteristics of that, just reverse it. Okay, for distribution. So you can see here, this happens in uptrend. Okay, when price stops going down, then it goes sideways. So second is exactly that, price goes sideways, trading range forms, right? Third is that volume declines during the range. This is very crucial. Okay, so if you see here, let me actually put the volume. All right, you can see around here, volume is declining. See, volume got very less on this area, right? And then it actually goes down like that. You see, right? And then when this came, this also like came down, but when the market goes down, then the volume goes up like that. Okay, so I mean, here you can also see, like, volume here gets down, right? So yeah, volume is actually declining there. Okay, multiple tests of the resistance that we're going to be seeing, that's actually the action executing by the institutions. Okay, so let's actually um, yeah, so you can see multiple tests of the resistance there, right there, breaking down action. Now, eventually, price breaks below the support. That's what we see here. And the sign of weakness happens around here. Okay. Yeah. All right. So let's continue. Why distribution works is because of the institutional behavior. Okay. Because institutions can't sell millions of shares instantly. They actually tried, uh, if they tried, all right, price would actually go down immediately, and they get less of what they're making. All right, so what they are doing is, like, when they finish selling, right, and after that there's nothing left to buy, then price has to go down, and that's what we see in distribution, right? So see, selling gradually and then price declines. The composite operator that we discussed, all right, they are active in distribution. All right, they are selling, they're exiting positions, and they're leaving tracks in price and volume. All right, you can see this big breaking down action, another breaking down action, right? Yeah, a lot of purple candle, that means, like, institutions are selling. You see, very high volume here. All right, so you can see even this candle, you know um, this so much high volume, why candle didn't close upside, why it had to close below the low, like, near the low. So you can see the institutions started selling around here, very high volume, then it goes sideways, then they are testing those support becoming resistance, and then finally price goes down there. Okay. And they are actually leaving tracks with this purple color of volume candle. So we can read those tracks, we can align with them, and by getting out or going short. Okay. So this is what I actually told you. All right, if you are in a long trade, just get out, get in this trade again on the short side when it is below that, right? So complete Wyckoff distribution map is, we see backing up action appearing here. Okay, automatic rally reaction, then secondary test, and then all those stuff, upthrust after distribution, sign of weakness, LPSY, all this stuff I'm gonna teach you. And then markdown finally starts. Markdown. Okay, red means markdown, right? Green means mark of phase. All right. So let me actually show you. So whatever events that you're seeing, you can also come to this distribution and check them out as well. So you can see LPSY, LPS, right? Upthrust. You see UT. UT means upthrust. All right, and I'll tell you what it means. All right, as we have springs, we have the opposite of spring is upthrust. The opposite of LPS is LPSY. All right, so yeah. So practical application for distribution is that, is price in a range after an uptrend? All right, is volume declining? So if you want to identify a distribution really good, you need to understand that, okay, this happens in uptrend. Okay, second of all, is the volume is declining or not? All right, and third is there multiple tests of resistance? I might be repeating myself, but guys, you need to understand this. All right. Second is wait for breakdown. All right, don't sell during distribution. Distribution is preparation, and the money is made in markdown. Okay. Yeah, in order to show you guys, like Wyckoff schematic. All right, check this out. So this is Wyckoff schematic for accumulation. Okay, and this is Wyckoff schematic for distribution. Okay, check this out. I like this one. Let's see that one. Yeah. Hmm. This is also a good one. So see, if you want to read more about it, you can go here. You see preliminary supply buying climax, automatic reaction, secondary test, phase A complete, sign of weakness in phase B, right? Upthrust, and then upthrust after distribution. Okay, this is schematic number 1. All right. Upthrust after distribution happens on phase D, and then LPSY, sign of weakness, and then it's breaking the support line when the support is becoming resistance. All right, you can read all about those stuff here. Okay, you see how it's they're drawing with hand and all this stuff, but with this indicator you have power to actually just put it on any chart, and like it will play out. For instance, I can just put it on 15 minutes, and it somehow plots it really cool. All right, so um yeah. Wyckoff method. If you go to Wyckoff method, you can read this really good article which discussed about Wyckoff price cycle, right? 3 laws. All right. Uh, this is your accumulation structure, right? Spring, LPS, backing up, sign of strength. You can read about those here. All right. Then there are a couple of phases that we discussed, right? See here in the schematic 2, there's no spring, right? Only LPS, sign of strength, backing up action, right? Distribution event, this is how it looks like, which we discussed already. You can actually read more on that. All right. There's different phases on this distribution, then supply and demand analysis, all this stuff. So guys, like whatever I'm teaching you here is it's really top education that that you're getting. All right, so let's continue. All right, so wait for the breakdown. Don't sell during distribution. Distribution is preparation. Okay, the money is made in markdown. All right, so what it's telling us is that, like, when if this is a distribution, right, don't just sell here, don't just sell here. Okay, wait for the markdown phase and then you can sell here, and you can make profit like that. All right, so if I go back around here, all right, I would do some this. All right, I see selling is coming in the market, so this is your sign of weakness. All right, and then market can go above the resistance, so it tries to come down from there, and that's your like breaking down action. It's already in markdown phase, so we can actually sell it. All right, put our stop loss above the support there, right? And then what we can do is put our take profit, uh, short target levels, short target labels like that. Okay, so I can drag my TP this one here, or I can just drag it here as well, TP2. Okay, let's see how it goes. So as I did that, there is support here, so let's see if it breaks there, and then it goes down. All right, see there. Okay, so it goes down, it reached our TP. So what I'll do, I'll actually get out of half of the position. So I'll just buy half of the position, book some profit on that, half of that, you see, half profit, half is active. And I can drag my stop loss to this high. All right, so let's continue. So here we see market hit our take profit and we got exit out of the trade. All right, so see, all the trades were profitable. All right, now this is what is telling you that, like, you know don't just start selling here, wait for the market to give us a clear signal of markdown phase, and then starts going down. So, because money is made in markdown. All right, so let's continue. um, So step 3 is watch for sign of weakness. All right. When price breaks below support with volume, that's your signal. Exit longs or enter shorts. All right. So when it breaks with volume, all right, around this here, you see this was good volume, higher than previous couple of candles, right? And then on this candle, it's like very high volume. See, right? So that's your sign to actually take short trade there. Okay, another short trade there, very high volume break. Okay, so common mistakes that you might be facing is that holding through distribution. All right, don't hold your trade through distribution. All right, because price can be in distribution for a very long time. For instance, if I go to higher time frame, all right, there, perhaps, like, suppose if you had taken short trade around here, and like you just put your stop there, you would be like waiting for trade for a couple of days, like that. Okay, and then when finally it turned red, markdown phase, then you can actually sell short around here, sell short when this breaks down, and like LPSY, this will actually, um, you will make more profit when the markdown phase starts, right? Instead of holding your trade through distribution. Okay. So mistake number two, not waiting for confirmation. Okay. Don't assume distribution is complete. All right. Wait for the breakdown, wait for the sign of weakness, and then you can take trade. Okay. Mistake number three, ignoring volume. So if volume isn't declining during the range, it might not be distribution. All right. So you can actually see that here. Okay. So let me put wave volume. Okay. You can see volume. It's like this, like a lot of volume came on the upside, right? But then on this up wave, very less volume. So this was your, we call in technical term, we call it divergence. Volume is there. Sorry, price is the result is there, but volume is not there. So there is inconsistency between price and volume. So this was your potential short trade. um, yeah, you can see volume is increasing on the downside a little bit. This was very high volume, but on the upside, but market didn't made much higher, didn't go much higher. We saw a lot of LPSY, and when this happened, this wave, you see very high volume, 102 unit of volume. Then on the upside, volume was less. So boom, breaking down action. This was good breaking down action. Market came down very fast. You see, just within like, I think 3 hour, 4 hours something, market came down, traveled around 2%, right? Then it went up like that, very high volume. See, very high volume compared to this, but there isn't much reward, all right, result. So market has to come down, and it did indeed comes down there, and then it just breaks this trend line. Okay, you see, this is actually new for you guys. So I didn't had this plotted in the previous lecture. So it's just like, the ascending trend line and descending trend line plotted from the top and bottom. Okay, so see, if this is our top, this descending trend line comes like that, right? You see. Okay, and right, so there's like a lot of trade that you can take when this breaks down. See, like that, it breaks down, boom. See this very high volume break, boom. So wait for volume. All right, so like wait for volume confirmation, and then you can take trade. Okay. Complete distribution structure, I showed you guys already this one. All right. And there's also 5 different phases. Okay, phase A, phase B, phase C, phase D, phase E, as we have in accumulation. And like each phase and event tells us something different about the institutional selling. Okay. What's next? All right, in the next lecture, we're going to be learning about phase A, stopping action on an uptrend. Okay, so this is like the start of the distribution phase. Okay, so where the uptrend stops and distribution begins. Okay, so I'll see you guys in the next lecture. All right, please go ahead and practice, and yeah.